US, particularly about something as important as how data is used to create or improve the customer experience. So very looking forward to this presentation. So, and with that, I want you all to please join me in welcoming Amy Young. She's the Industry Digital Strategist at Microsoft. Amy?
Thank you. So, good afternoon, everybody. It's a real treat to be here. As was just announced, my title is Industry Digital Strategist at Microsoft. And what that completely ambiguous title doesn't tell you is that it's my privilege to work with a select few of some of our largest financial services customers on partnerships to help them accelerate their innovation agenda. So I'd like to start my talk this afternoon by asking you to think back to your very first Uber ride. Mine was about 10 years ago. I was going out for dinner with my sister. I wanted to walk to the restaurant, but she insisted that we take an Uber. And so I have a bit of a taxi cab phobia, but she promised me that this Uber thing was not at all like taking a taxi. And so since it may have been some time since any of you has taken a traditional cab, and for any Gen Z folks in the room, you've never even known a world without Uber, so let me refresh your memory. So the fun starts with getting the cab. You either have to call into a dispatch center, wait on hold, deal with a really crabby dispatcher, or you have to run around looking for busy street corners where you think there's a decent probability that a taxi might actually drive by. Once you actually get in the cab, you have the challenge of explaining your destination. So this is fine if you're going somewhere obvious, but if it's anywhere obscure, there's a good chance your driver's going to have no idea what it is or how to get there. Once you actually get started, you have to be constantly vigilant that they're not taking you on some circuitous route to drive up the fare. And then, of course, there's the payment. That awful moment where you give the guy a $20 for a $16 fare and have to feel like a heel when you ask for a buck or two back. So the good news is my sister was right. This Uber thing was indeed a game changer. The car arrived outside her apartment at exactly the right time, so we didn't have to wait in the cold. We got in the car, and the guy knew exactly where we were going. We saw what route we were going to take, how long it would take to get there. And then, of course, when it came time to pay, we just hopped out of the cab. So my talk today is called From Share of Wallet to Share of Life. And I thought that title might interest you for two reasons. As business leaders, the idea of having the opportunity to pursue the entire share of life of your customers has a much bigger TAM than the product marketplaces we typically focus on. But beyond that, several of you are probably starting to feel new competitive pressure from companies that are starting to embed your products in other experiences. And that's bringing down some industry barriers and introducing competition that would never have even been on your radar 5 years ago. So in the next 15 minutes, I am going to paint a picture of what the share of wallet opportunity, share of life opportunity could look like. Share some stories of fintechs that you've definitely heard of and how they've been successful with this model. And I'm going to provide you with a framework to give you some guidance on how you might implement this in your organization. My key goal is to convince you to stop competing for bank accounts and start competing for access to customers. So what do I mean by share of life? With every job we need to get done, there's the core job, and then there are all of the ancillary tasks that sit around it. Take the example of paying a bill. It's actually a combination of a whole series of tasks. You have to find the bill to get the due date, the mailing address, and the amount. You got to find your checkbook and a pen. Then you need to get an envelope and a stamp, and finally you get to drop the thing in the mail. We all know we need to reduce friction from our products, but two pieces of this are often overlooked. The first thing is the opportunity to reduce friction from all of the tasks that sit around the core job. And the second thing is the opportunity to find ways to create new value for our customers from the things they're already doing with us. Yep, back. So the problem with this, there are two problems with this. First of all, often completing the job to be done depends on our ability to complete all of these other ancillary tasks. I can't write a check if I don't have a pen. And the second problem is that it leaves us vulnerable to competitors who might be able to solve that broader array of tasks. Now, this wasn't such a big deal in the analog world when it was kind of tough for new competitors to get access to our customers. But now that our phones, appliances, cars are capturing data about every aspect of our lives, companies out there are gathering a lot of data about your customers, and they're using it to enter your market. So I've developed a framework that shows how I think this can play out. So picture a 2x2 with provider value on the y-axis and user value on the x-axis. The journey from share of wallet to share of life starts by simplifying a job to be done. Once you've picked the job, the goal is to find new ways to remove friction from that job, but with a specific focus on the activities that sit upstream and downstream from that job. Now, while the solution does need to be digital, it's important that this is not about digitizing a process. It's about making the whole job get done better. In my Uber story, getting the job done better meant things like not having to wait in the cold and having the payment embedded in the app. So think about the benefits that this could have for the provider. The main reason for digitizing this job to be done is to create what I call a data collection engine. Taking a job from the analog world into the digital world changes everything because it creates the opportunity to capture data about every aspect of getting that job done, which we don't see when something is done in the analog world. Once you have this data, now you can analyze it to really understand potential new user needs. You can compare variations across users, and you can assess the impact of context, things like location or time of day or weather. In Uber's case, the data collection engine allowed them to start to predict rider demand and driver supply, and then of course they could design new incentives to help better match the two. So let's think about the benefits for the user. This is all about the feedback loop. So when we're in the digital and connected world, one of the benefits is you can provide me as the user with complete visibility into what's happening at every stage of my experience. So when something goes wrong, you can recalibrate, or you can give me recommendations of other options that might help me continue to optimize my outcome. Uber's feedback loop made a huge difference in the predictability of the experience, providing complete visibility into the price and duration of the trip. It also had the ability to optimize, the way they're able to auto-magically adapt the route to avoid things like traffic or other delays. And once you've created this data collection engine and you've got your feedback loop working, now you've built the foundation to start to grow share of life. This is where you can layer on new services. or bring in new partners to expand your reach further, or create an entire ecosystem. What's really key here is by leveraging the same data foundation across all of these features, you start to get more and more value for less and less effort, and those benefits accrue to both the provider and the customer. So what you start to see here is a flywheel effect. You have lower risk innovation because you know what users need, so you have a lower failure rate of your new product releases. You know what to market to whom and when, so your cost to acquire declines. When you have all this data about your customers and you're providing continuous value through the feedback loop, switching becomes unthinkable, so your attrition declines. When you waste less money on product failures and inefficient acquisition costs, your return on invested capital goes up. And all of this leads to more predictable earnings growth and invariably a lower cost of capital. So now let's look at another example. And because I'm Canadian, I'm going to talk about Shopify. So the core job that Shopify sought to simplify, of course, was the creation of an e-commerce store. And they did this by bringing together tools to help SMBs create their first website, set up a merchant account, and activate a payment processor. By having these SMBs use these tools, they created a powerful data collection engine. They had complete visibility into the entire sales funnel, the views, clicks, conversion, and margins. They could then assess the financial health of these companies, and over time, they've had incredible insight into consumer trends across industries, geographies, product categories, and more. In the process, they provided a really valuable feedback loop to their users. They could give them continuous insights about the health of their business and how they were doing compared to others like them. And then they were able to turn that into tailored coaching to help you find ways to make your business better. If any of you have friends or family that run small businesses, you know how much that business consumes their life. And the ability to change their approach to managing their business from a reactive one to a proactive one gives them their life back. I mean, this was huge. And so with the foundation of the data collection engine and the feedback loop in place, they started to grow share of life, finding ways to have a deeper relationship with their customers and become more and more important. So they layered in marketing tools, for example, to help these SMBs grow their businesses. And then they created a supplier marketplace so their customers could sell to each other. And of course, they ultimately provided financing, but not the way banks do it. They completely transformed this process by eliminating the need for a loan application. I mean, think about it. When you've got data from clicks to orders to cash, what other data would you possibly ask for in an application that you don't already know? And so you see a similar flywheel effect happening with Shopify, as I mentioned with Uber, where they have a progressively lower cost of acquisition, high retention and loyalty rate, and ultimately much more predictable earnings growth. So I don't have time to go into more of these stories today, but I wanted to put these names up there because I think this model that I've described has been proven to be successful across many of these famous fintechs. And we saw it this morning already with Branch. I think they adhere to this model as well. Loved that story. So if we take as given that this model works, how might you bring this into your world? Every financial institution has journey slides that look something like this. We use them to connect our products to life milestones of our customers. The only problem with that is that most of life occurs between these milestones. And as a result, most purchase decisions occur between these milestones as well. If you think about the 2x2 I showed you earlier, the data collection engine and the feedback loop, the real power of these things is their ability to help you get in between the milestones, into the micro steps of everyday life. And that's where data is generated and trust is earned. So now let's look at a specific example of what a bank might be able to do to get involved with these micro steps. So 25% of Americans aged 25 to 34 moved in the past year. They didn't buy houses, I'm talking about apartment moves. But I think this is a great example to show how to start to build a foundation for growing share of life. So the experience all starts with being able to identify a rent deposit transaction in the customer's checking account. And you can use that as a trigger to offer a series of experiences and resources to help that young person's move go more smoothly. So picture starting with securing a moving truck. You can maybe negotiate a discount on that moving truck if you put the purchase on your bank's credit card. You can give them access to a service that facilitates the process of changing your addresses for all your service providers. You can help her understand her insurance needs to make sure she's got the right coverage for her new place. She's going to need to set up automatic withdrawals for the rent payment to the new landlord, so you could set her up in your bill pay service. Now that she's going to have a lease and a new insurance contract, maybe it's a great time to give her a place to store these important documents, like your bank's electronic vault. Picture a BNPL-style mover line of credit that could give her a lump sum of money to cover all her moving expenses that she can pay back in 12 simple installments. And finally, how about some referrals to local shops in her new neighborhood? Maybe a free pizza for moving day. So what's in it for the bank to do all this? Well, you can get referral fees from the movers and the insurance companies. All of the experience that helps you change addresses gathers a trove of customer data. Having the rent withdrawn, facilitating the setup of the rent withdrawal goes a long way to securing your status as the primary checking account, because where the rent goes out, the paycheck probably goes in. The vault can be a great loyalty tool as her life becomes more complex and she has more things that she wants to safeguard in it. The BNPL offer obviously increases your card spend and makes sure she's spending with you instead of with Klarna. And finally, that SMB offer, that free pizza, that actually comes from one of your SMB customers. What a great way to differentiate commodity banking services for SMBs by helping those businesses get new customers through an offer like this. So there's clearly a lot of value in this for the bank. How do you execute? So as a Microsoft employee, I would love to be able to tell you that it's all about the technology and hold my beer while I go fix it for you. But unfortunately, that's not quite the case. So most banks are organized to focus on maximizing product sales. And while that is great for creating clear accountability and designing simple comp plans, that can have the unintended consequence of having leaders focus too much on what they have to sell and not enough on what the customer needs to buy. The share of life approach is different because it gathers data to really understand the needs of each individual user. I'm not talking about a segment of users or not even a segment of one, but a segment of one in a specific context. Then it looks beyond removing friction from an individual task to creating a holistic experience that helps that user with the operational micro steps of everyday life. As a result, these organizations look a little different. At their core is a platform that provides experiences that creates data for the bank and value for the user. That core enables all of the products that we traditionally associate with banks, and sometimes there are some new products that come out of it too. What's fundamentally different is that we see third-party products coming in to this ecosystem now, enabled by all of this data and insight. And because I work for Microsoft, all of this is enabled by a modern, flexible microservices cloud foundation. So I hope I've inspired you to think about how a share of life approach could create value for your organization. And I'd like to leave you with 3 final thoughts. Number 1, look between the milestones. Life is complicated, and we're all just trying to find ways to spend more time doing the things that bring us joy and fulfillment. And that's going to be different for different customers. For some, that'll be about travel and fitness, and for others, it'll be about family and their business. But look at the lifestyle needs that could be a great fit for your organization, and then try to craft experiences that can help your customers achieve better outcomes in that part of their life. Second, obsess about the data collection engine. We all must earn the right to expand from capturing data about transactions to capturing data about the operational micro steps of everyday life. We need that data to create the experiences that are going to translate into predictable earnings growth and increasing shareholder value. And finally, measure success a little differently. Design KPIs that help you really understand what's going to engage your customers and create value for them. Because if you do a great job of that, the product sales will follow. Thanks so much for your time, and I hope you enjoy the rest of the day.
One question?
One question, okay.
One question. Anybody? Go ahead.
Tell us about the type of data collection engine that is required here, or shall I say, a 100 or down bank, the vast majority of financial.
Well, I think with a smaller bank, focus is really important. So I said a minute ago, the idea of thinking about the lifestyle needs that are a good fit for your bank, I think that's really critical because you got to start with something manageable and then build from there. So regional banks often have interesting niches in their customer bases. The branch story we heard this morning. I mean, not that truckers are a small niche, but picking something narrow that you actually you can create a right to play in that space and capture some data that you can turn into a feedback loop that demonstrates value back. I think that's really key. But I think this is a strategy that has more legs for more of a scale bank. But I think it could be relevant to a mid-sized bank, particularly given the idea of bringing in third-party partners, because they can expand your reach beyond traditional banking to make a more holistic experience.
And of course, the bank already has a lot of data points about you. But what sort of engine do they need to make that make sense?
Sorry, what sort of engine do they need to?
How do they look at my transactionality and create this niche, these lifestyle moments that might be useful for cross-upselling, making me a happy customer? Is it certain software, something Microsoft provides?
Okay, so sorry, I forgot to repeat the initial question, but so this one was more how do I create the analysis and the insight from the data I have, is the question. And does Microsoft have tools? Well, yes, obviously. You know, it's more my role to help our customers envision these kinds of things with, you know, the high level knowledge that we have tools to do pretty much anything. But the idea here is that, you know, our CEO, Satya Nadella, likes to talk about the ability to reason over data to extract insights. And, you know, this, to some extent, this is very much a test and learn thing, right? This isn't an out-of-the-box kind of proposition. You start with a core job that you know is not working well for a specific type of user, and you try putting something out there and, you know, seeing if they'll adopt it, and that's how you start to build the data collection engine that you can then reason over to find actionable insights. But the cloud obviously is a tremendous enabler to reducing the cost of that innovation and getting started.
We gotta go.
Okay.
Sorry.
Thanks so much.
Thank you.